Well, the Bank of Canada made its announcement today, including a 54-page report on Canada's economy, and hidden deep inside of that report, they finally take notice of the drastic decline in the value of the Canadian dollar just over the past 4 months. Now, this has a big impact on Canadians, their savings, their investments, and their job prospects, believe it or not, because the Bank of Canada says that there are two reasons that this is happening, but they also conveniently leave out one reason that they don't really want to admit, despite the fact that they kind of hint at it. But I believe this one underemphasized reason is playing a lot bigger of a role than they'd have you believe. So let's get into what's been going on over the past months, why it's happening, and the role that the Bank of Canada plays in all of this, along with how this is all going to impact you directly. This is the Monetary Policy Report, the report that just came out today from the Bank of Canada. They do these regularly, sort of outlining their view of the Canadian economy and why they're doing what they're doing. I just finished reading it, and all the way on page 49, if I can get there, all the way on page 49, they start talking about their stance on the dramatic decrease in value of the Canadian dollar. Because in October, one Canadian dollar was worth 74 cents US. Today, instead of 74 cents, the Canadian dollar is worth 69 US cents. Nice. That represents a 7% decrease of the Canadian dollar in just a few short months. And they outline a couple reasons why this could be happening, but they put more emphasis on this first one. They say that the Canadian dollar has declined against the US dollar since October 2024, mostly due to rising uncertainty around trade policies. Now, this can definitely have an effect, and they point to it as the biggest reason, but I do have some skepticism there. What's going on with the US and Canada can have some big impacts on the Canadian dollar. But first, you need to understand exactly how the Canadian dollar changes in value. And it's actually a lot more simple than you might think. It changes its value as a product of supply and demand. This is a little bit oversimplified, but that's okay. It's all you're going to really need to know for this video. As more and more people want Canadian dollars for various reasons, the value of the Canadian dollar goes up. And on the flip side, as more and more people want different dollars and don't want the Canadian dollar as much, well, the demand for it goes down, and as a result, the value of it goes down. So with that in mind, we think about the impact of these potential 25% tariffs coming into Canada as early as this Saturday. And the first thing that comes to mind is the less competitive exports that we'd have. Because of these tariffs, fewer companies would want to import from Canada, and that would result in less demand for the currency that they would need to buy those goods with. If you're trying to buy Canadian goods, you need Canadian dollars, but if you're no longer needing those Canadian goods or no longer can afford them due to tariffs, well, you also don't need to hold the Canadian dollars that you need to purchase them in. But an even bigger one is the reduced business investment that we could see in Canada. Not knowing what their margins are when accounting for cross-border trade means that fewer people and businesses, companies, fewer of them will choose to build manufacturing plants in Canada and choose not to make other large-scale business investments. Now, not only could this impact the availability of jobs for Canadians, but also it simultaneously decreases the demand for Canadian dollars, because those companies that would have built these factories and paid to build them in Canadian dollars, well, they don't need to hold those Canadian dollars anymore. And on top of that, they don't need to pay these new Canadian workers in Canadian dollars. Less demand for people to hold Canadian dollars results in the value of those dollars going down relative to the US dollar. Now listen, this all definitely plays a role, and it's also the one factor that's most outside of the control of the Bank of Canada. So of course, they're incentivized to say, hey, look at all this loss of value in our dollars. This is only happening due to Trump and these tariffs. That's the scapegoat. You should be mad at him. While at the same time, they minimize their own role in other areas. They do admit to one of these areas, though, and that's something that they call interest rate divergence. It sounds complex, but it really isn't, and it's something that the Bank of Canada does impact. The concept is interest rate divergence. It's way more simple than it sounds. We've talked a lot on the channel about bonds. All you need to know is that governments sell them to raise money. But today, just think of them as one of the biggest investment vehicles in the world. If you take the value of all the stocks in the world and add them all up, that's about $115 trillion. Yeah, that's mind-bogglingly big. But if you do the same for bonds, well, that sum is about $25 trillion more at $140 trillion. All this is to say, bonds matter. Both the government of Canada and the United States of America issue these bonds to raise money. And then investors say, hey, you know what? We're going to buy these bonds because they also offer an interest rate for the investors. Now, these bonds will often change in terms of what interest rate they're going to pay out. Right now in Canada, that rate is 2.8% if we're looking at 5-year bonds, and the United States one is 4.3% of an interest rate that they will pay out to the investors who choose to purchase the bonds. Now, the difference between these two interest rates or these two yields, that is called interest rate divergence. The difference here, I think it's about, 1.5% is the divergence or the difference between the rates that Canadian bonds pay and the rates that American bonds pay. So if you were an investor, which one would you choose to invest in? Well, I think it makes some sense that you would want to buy all of these 4.3% interest rate bonds because you're going to get paid a higher rate on your money, right? Now, this results in the global market of people who want to buy these bonds. Well, they're going to look more regularly to buying US dollar bonds instead of Canadian bonds. Now, as a result, you got to use US dollars to buy US bonds. You need to use Canadian dollars to buy Canadian bonds. But if there's fewer buyers of these Canadian bonds and way more buyers of the US bonds, well, fewer people need to hold Canadian dollars, less demand for Canadian dollars. You'll remember this from the last section of this video. That results in a decreasing value of the Canadian dollar. And if I've lost you at any point, don't worry, because we're going to get into how this impacts you directly and how you can sort of position yourself to be best situated for this if this situation plays out further. Now, we just talked about this divergence here. There's a lot of different reasons that these bond interest rates will differ from one another. Now, there's a number of supply and demand dynamics that impact their value in those rates, but the interest rate that the Bank of Canada sets, and the same one that they just lowered today to 3%, that rate that is controlled by the Bank of Canada plays a role in this divergence, and it's going to widen more now that they've just cut rates again, putting more downward pressure on the Canadian dollar. So you might be thinking, well, why is the Bank of Canada lowering rates then if it's decreasing the value of the Canadian dollar? Well, they've kind of been backed into a corner when it comes to this. When we look at the US economy, well, they've been growing strong, especially when compared to Canada. In Canada, we've got low growth, especially since the government stopped using temporary foreign workers for cheap labor and added demand, something that really pumped up our growth over the past couple of years. I call it a form of human QE. We've talked about it a ton on the channel as it was happening over the past couple of years. And by the way, if you haven't already done so, subscribe to the channel. It doesn't cost you a dime, doesn't sign you up for anything. It only helps the channel. So if you've gotten to this point in the video, I would greatly appreciate that. Now, all this is to say that the Bank of Canada likely feels backed into a corner that's forcing them to lower rates. Our economy is weak, and since we have trouble increasing our productivity to spur growth, the only answer is lowering rates to boost economic activity, to prop up the Canadian economy. And today, the governor of the Bank of Canada indicated that they're kind of okay with the Canadian dollar taking a hit if it means they can continue to lower interest rates. Listen to this.
Has the movement in the Canada-US exchange rate constrained our monetary policy decisions to this point? The answer is no. We've cut our policy interest rate 6 consecutive times now, bringing the rate down from 5% to 3%, 200 basis points. That is having some impact on the Canadian dollar, but as we discuss actually at some length in the Monetary Policy Report, that effect is relatively modest. The depreciation we've seen, the recent depreciation we've seen in the Canadian dollar has been more driven, in our view, by trade uncertainty, and particularly President Trump's threats to impose 25% tariffs on Canadian exports.
So to me, it seems like what he's saying is we only primarily care about price stability, low and stable inflation. Hell, that's the Bank of Canada's mandate, the whole reason they're around. And I think that they're thinking that, hey, since we've got inflation down now, we want to lower rates to make sure we don't overshoot. We want to make sure that inflation doesn't fall too much, possibly falling into deflationary territory. Now, the Bank of Canada wants inflation right in their 2% Goldilocks zone. And that Goldilocks zone is kind of up for debate. A bunch of people believe that it's arbitrary. But it seems that the Canadian dollar now is serving as somewhat of a economic sacrifice to spur on growth. The Bank of Canada doesn't seem to care all that much that the Canadian dollar is dropping in value. And the fact that it is in my eyes, a result of the monetary policy decisions that they've been making. So they say it's mostly Trump's fault, and to a small extent, it's the Bank of Canada's bond interest rate divergence, that split between U.S. bond interest rates and Canadian bond interest rates. That's what's pushing this down. But there's something else that they hint at in this monetary policy report right at the end, but they don't really take any responsibility for it. Let me show you what I'm talking about. In this chart that they've given us, they show this black line, and that's showing the decrease of the value of the Canadian dollar. And they show us this blue and the yellow. The blue represents the extent to which they think that this depreciation is due to this spread between interest rates. And they say that the yellow is something called the exchange rate risk premium. And they say that that's mostly what is causing this. And to simplify it, that's mostly an expression of how risky people think it is to hold Canadian dollars based on what they think will happen to the future value of the dollar. Will it go up or down relative to the US dollar? If people think that the dollar is going to go down, well, then that's also a reason for fewer people to hold it because, well, why would you want to hold something that's going down in value? Now, the Bank of Canada tries to mostly say that this is due to the uncertainty of this possible trade war, that more and more people are thinking like this, but I have some other thoughts. What people think the Canadian dollar will do in the future isn't just a product of trade and a product of this interest rate divergence. I think that it also is a response to what people think the Bank of Canada is going to do in the future. Will the Bank of Canada respond to the Canadian economy by implementing more policies that further devalue the dollar? There have been recent indications that they're open to more of that money printing pandemic style quantitative easing if the situation calls for it, though they say that would be a high bar, but who knows what that bar is for them. Now, if this were to happen, while it's simultaneously not happening elsewhere, especially the States, well, if you have one country that's printing more dollars and one country that's not, well, certainly the country that's printing more dollars would also be devaluing those dollars. It seems to me that the people who are deciding whether they'll hold Canadian dollars into the future, people like you and me and companies and all types, well, they're thinking that these types of policies are more and more likely, making the Canadian dollar more and more risky to hold. So while they're trying to say that most of this is happening because of what Trump is threatening and the potential of these tariffs and the uncertainty that that causes, it turns out that even they don't really know if that's true, even though they're kind of framing it that way. They go on to say that in practice, it's very difficult to distinguish between whether this depreciation is happening because of uncertainty effects from Trump or whether it's happening because of changes in market expectations about the long-run value of the exchange rate. In normal human words, they don't know whether it's because of Trump or whether it's because people think that the Canadian dollar is going to depreciate further, partially because of the actions, or partially at the very least, of the actions that the Bank of Canada executes over these coming months and years. And that's really my main issue with central banks. And you'll know it kind of is a theme on this channel that I voice my criticisms of them. My main issue is a consistent underemphasis of the ways that their decisions made by centralized, unelected officials, well, those decisions play a big role in things that impact the daily lives of Canadians, even though they wouldn't want you to think that. Now, I'm not saying that there aren't tools that central banks can use to help the markets function and to help to keep prices stable. What I am saying, though, is that there's very little accountability when this doesn't happen, and there's an extreme hesitance to draw any kind of attention to themselves when the shit hits the fan. So that's the what and the why of all of this Canadian dollar depreciation. But what should we be doing about it? I'll give you my best answer here. Honestly, we can't control the tariffs, whether or not they come in. Hell, we can't even really control who's negotiating this stuff on our behalf, because I think stalling tactics are going to result in an election not occurring until October 2025. That's a story for another day. But what I would say is, first off, try not to get too consumed in this stuff. Look around in your personal bubble, in your personal life, and recognize the positive things going on around you. I fall into this trap too of like hearing this kind of stuff is alarming, right? It doesn't mean that you shouldn't know about it, but a singular focus on this stuff all the time can make you forget about the good things in your life. And I think it's important to focus on the positive, know about the negative, but try to keep your mind on the positive stuff. That's maybe more of a mental tip, one that I'm maybe just giving to myself more than to anybody else. But from a financial standpoint, my thought would be invest, invest, invest. Do what the elite do, because it seems to me that policies tend to always work out well for the rich and not so well for the poor and middle class. The elite people are protected from a swing in the value of the dollar. They honestly don't care much about what the Canadian dollar does, and that's probably why they're not too hesitant to sacrifice it here. They're protected from these swings in the dollar because they don't hold their wealth in dollars for the most part. They hold it in investments like stocks, real estate, precious metals, sometimes even crypto, things where their value isn't so tightly tied to the value of the dollar. In these cases, as the dollar gets less valuable, well, asset prices tend to go up to reflect that new reality. So as a starting point for you to make your own decisions, this isn't financial advice, I'd say start by doing your absolute best to save a 3 to 6 month emergency fund of cash. Hold that in a high interest savings account. In some places you can get around 3% right now on that money. Now that 3 to 6 month emergency fund is designed to protect you from the uncertainty in your own life. Now, once you've achieved that goal, it's going to help you with this next step, which is investing. Preferably, you're going to do that investing in a self-directed TFSA or RRSP. These are investment accounts that have tax advantages. Now, inside of them, look into diversified low-fee index ETFs. And doing so will keep your money invested, minimizing the personal cost that you could pay as these games with our dollar are played. Hell, it's what the wealthy do. And this may not be news to you, but it seems to me that it's the wealthy who are really making the decisions in this world. Now, you don't have to like it. I certainly don't at times, but there's really no choice other than to just play the same game that they're playing and do your best to do so. So that's what I think about all of this. I'm curious what you think about it. What do you think of these tariffs in general? What do you think of the Bank of Canada's potential future response to these tariffs? Are they helping? Are they hurting? What have I missed? What have I gotten right? I'm just trying to figure this out like anybody else. So let me know. And subscribe to the channel if you haven't already done so. Like I always say, it's one click, doesn't cost you a dime. If you've made it this far in the video, I would really appreciate you doing so. It only helps out the channel and me personally. So thank you for doing that. But with all that said, thanks so much for watching, everybody. I really hope this video helped you out at least a little bit, and I'll see you next time.